Hey, good morning, people. Morning, morning. It is Tuesday, June 18th. What a rally we had yesterday into fresh all-time highs. Markets move up, melt up secured, and let's continue this wave. We broke through distributions higher yesterday, right? We were looking yesterday for some of those longs to shape up, but this expansion is something else. So yesterday, Nasdaq, or sorry, the S&P, we should call it. We'll start with that first. I did want to take a look at Trading View here. Come on. We can open that up to get a better look at these things from like a day-to-day perspective. But first, before we dive into this, remember tomorrow markets are going to be closed, so we're going to be off. No day trading these futures because it's just going to be like an early close, low volume. If you trade it, enjoy. It's going to be crap. But highly recommend you don't. Now, the S&P 500 notched its 30th record close of 2024. How ludicrous does that sound? Closing out the session on Monday on the SPX at 54.73. In fact, the index is now up 15% in only 6 months into this year, right? We're only halfway through this year. If this wanted to load, that'd be freaking amazing, but whatever, let's move to the side until it loads. But we're only halfway through the year, and the S&P has added $5.5 trillion of market cap, right? So a lot of this movement is a lot due to tech names, right? A lot's going on for the U.S. stock market right now. Things like rising corporate profits, cooling inflation, upcoming Fed easing cycle, as well as historically low market volatility, likely potentially a soft landing, and of course, the AI rally. Now, analysts keep moving their targets up and up as bullish energy takes over the street, right? Evercore ISI is out with a new 6,000 call on the S&P, up from 4750. Goldman Sachs and Citi move their end goals to 56,000 from 52 and 51 previously, and others like Seeking Alpha and different analysts have been continuously bullish since the beginning of the year, delivering multi-month forecasts and whatnot. So this bullish is not unprecedented. The melt up is here, and it was fairly fairly obvious from the end of last year at that point. Now, did I think that this would melt up like this and super aggressively without any significant pullbacks throughout the year? Not necessarily. One of the things that came out that's very interesting is that like everyone's so enthralled about these like big banks and like analyst forecasts and like their end of year goals and whatnot. They change them all the freaking time. The market moves up, they just move it up. Okay, big deal. These aren't generally like fairly contrarian. I wouldn't necessarily abide by them. A lot of people calling for crashes. When was it, last year or the year before that? Ended up flipping their end of year targets by the end of the year. It's a lot of kind of BS. And honestly, the higher they go, the more skeptical I get. Right? If all the big banks start throwing in their targets at S&P 6,000 at the end of the year, we're probably not even going to get there. So just something to consider as we go forth. Now, money is moving off the sidelines, especially as we enter into new all-time highs continuously. But how long will this last overall? Those concerns about concentration risk point to above average share of market caps and mega caps. And should things go south in this sector, it would weigh on the broader market, right? It's a massive, massive worry that the Magnificent Seven represents 2/3 of the gains for the year on the S&P 500. The other point, the success to reasons behind the trade, aka AI, and to be greedy when others are fearful. So even if those stocks are stretched, there may be a lot of room to run for many other companies in the S&P, which haven't seen significant gains and massive rallies throughout this year. Why the hell is this Trading View not loading? I want to look at some things here. Well, I guess this thing's like nuked. But a lot of tech has just been holding this thing up. Like the NASDAQ, I tell you how much it's up on the year, but I don't have Trading View up, so I can't. But most of the S&P 500 ETFs have similar holdings. They do differ slightly on the expense ratios, trading spreads, dividend yields, and assets under management. Two of the most popular are VOO from Vanguard, as well as the SPY, which is known for its massive liquidity and could easily it could have a lower expense ratio, be much more popular than VOO, but it's one of the best things to trade when in terms of options and equity. Intraday trading, right? It's very, very popular for that. iShares Core S&P 500 ETF IVV also comes at a lower fee, but its volume is significantly lower. And all these ETFs are priced at $500 per share and based on total assets and units outstanding. But if looking for lower price products, you might be looking at SPLG, which is the Spider Portfolio S&P 500 ETF, is a practical option, especially for those who don't want to dabble in fractional shares or even a smaller portfolio. So here it is. There we go. We've loaded it. I just want to take a look at some of these things. Most notably, yesterday I did, or maybe I didn't talk about that this yesterday morning, but you can see we're up significantly, right? We're up, what is it, like over 30% from that November low. We're continuously just rallying, gaps higher and higher and higher. NASDAQ, right, if we look at the triple Q ETF on its own this year, where is the start of the year? We had like 2 red days at the beginning of the year, then it just like rallied up. It's up about 20% year to date, and only half of the year has gone by. NASDAQ barely pulled back last summer, right? And we're up about 42, nearly 43% on this in less than a year at this point. So very significant rallies. A lot of this is led by the broader big tech names just hustling to the upside. And a lot of people are starting to call for recession, the R word. There are a few articles that are circling. What is going on? There are a few articles that are circulating right now, especially some out of Goldman Sachs, that could be interesting for people as we're looking into the R word shaping up again, right? Recession. But as it stands, right, we've seen a continued melt up, and I think that realistically we're not necessarily at that end. Now, if there are pullbacks, I think they happen in the summer. Again, it's an election year when things can pull back before that happens, but generally speaking, into the end of the year, they're expecting more of a broader rally in things. Now, if we can get rid of TradingView, because I don't know what happened there, we can just dive straight into the S&P 500 for today and get a breakdown of what's going on. Yesterday, we had this behemoth rally up. Generally speaking, when we're trading into all-time highs and there is a new distribution and consolidation that trades into that high, the break to the upside is expected. There's a higher probability of that happening. So that happened yesterday. Okay, great. Realistically, there's still some bullish momentum, but the way I see it is there are 3 levels for prices to hold for this bull side to come in. There is a lot of heavy offering from 58 to 59 yesterday. A lot of volume traded there, so that's a temporary resistance. But if we start turning back under 55.40 on the SPOOs, I'd target the 30 and the 17 to see if buyers want to step into that area. So there is a potential for a smaller pullback, but I won't get like crazy excited that we have to fade this all-time high, right? Just take it step by step and wait for these distributions to break. So that's where I want to leave this off, right? There's still some upside momentum. I just think that they're probably looking for buyers at better prices. That's what I would want to see today at least, and we'll go from there. We'll open up our trading room. Tomorrow, again, reminder, markets, the futures market is going to be open until like 1 p.m. Eastern. Stock markets, I believe they're just going to be closed for the day, and then they reopen on Thursday. Very weird at the beginning, in the middle of the week. So don't trade tomorrow, right? I'm still trading smaller, trying to just like limit the risk this week, and keeping in mind that it's rollover, regardless of this just massive expansion higher, which I wasn't expecting. But let's open up our live trading room. I'll see you guys on Thursday in